Recently, there's been a lot of news about a company called Nikola and how it may just be a fraudulent company, how it kind of misled investors to believe that its electric vehicle and its hydrogen vehicle was more advanced than it actually was with some of the commercials and some of the things that it was pushing out. And then that got me thinking about you and I, some of us that are just starting out to invest, and some of the lessons that we need to learn from this. Here are 10 mistakes that every new investor should avoid when they start investing. Let's go. Hey, what's going on, people? My name is KelechIwuaba. How are each and every single one of y'all doing? If this is your first time around these parts, hit that subscribe button. If you enjoy anything that I say over here, hit that like button. It will go a great way and mean a whole lot to me. But anyway, let's get right into it. The 10 things and 10 mistakes that every new investor should avoid. The first mistake that every new investor should avoid is investing all your money all at one time. In a previous video, I talked about dollar cost averaging, which is the way where instead of investing $1,000 all in one go, you invest $100, let's say every month, or $100 every week. That way you see both the highs and the lows of the market, and you're not just focused in on just the highs of the market or the lows of the market. You get to see both parts of the market. This is very important, especially for new investors. It gets you more comfortable with what you're doing. It gets you to learn more about what you're doing before you start investing larger and larger sums of money. Second mistake a lot of new investors make is thinking that they don't know enough to be able to start investing, or secondly, they don't know enough, so we gotta pay somebody else to invest on our behalf. No, you don't have to do that. In this day and age, there is so many free platforms. There is so much information out there that for most people, you don't have to pay someone else to invest on your behalf. All you have to do is invest in an index fund, a low expense ratio index fund, or an ETF with a low expense ratio. You don't need to be paying a high amount of money to get started investing. In this day and age, investing is extremely cheap and extremely affordable for each and every single person. And also tied into that, you also don't need a whole bunch of money to get started investing. All you need is about $10 to open up an M1 Finance account, link in the description, or open up an Acorns account, or any of these platforms for you to get started investing. So no, you don't need an exorbitant or that much money for you to get started investing today. Now, number 3. And this one is one that I love to talk about because for those who are subscribers on the channel, you know I love to focus on the mentality when it comes to a lot of things. And so when it comes to number 3, which is not having a goal when it comes to your investment. A lot of us just kind of invest because somebody else told you to invest. And so you're like, okay, I'm gonna invest because of that reason. But that's not it. You have to have a goal for yourself. What is the reason you're investing? Are you investing so that you can make income from this thing? Are you investing so that you can live off of it for retirement? Are you investing for what? What is your reason for investing? Because that goal is going to keep you going. That goal is going to help you continue down the road as it gets harder and harder, because there will be days when the market are going to be in the red. And in those days, you're gonna have to dig deep to be able to stay in the market. This one is another big one. Number 4, trying to time the market. I have not met a fortune teller that has been able to tell me the future. I have not met an investor that's able to tell me the future. You will never be able to time the market. I said it before and I'll say it again. It is better for you to be in the market than for you to try and beat the market. It is better for you to stay in the market than trying to time the market. You will never do it right. You may do it one or twice, but you're gonna miss a whole lot of gains when you're sitting on the sideline trying to find when is the market bottom or when is the market top. It's just better for you to just sit in the market and let that thing roll on and on and on. Don't try and play the market. The market always wins. And here's number 5. Number 5 is borrowing money to invest in the stock market. Like, why? You are just starting out. What are you doing borrowing money, which this is what we call investing on leverage. This is where you borrow money from a bank and then you invest in it and hoping that you can make more money and give the money back or give the principal back to the bank account. For most investors, you don't need to touch any of that, because the amount of risk that goes into that is way too much and you don't know what you're doing just yet. If you're watching this video, it means you're a beginner. So do not, I repeat, Do not invest on borrowed money when you're just starting out. Yes, I know you hear people talk about how, oh, the only way you can make money is you gotta borrow money. You do that when you actually know the game that you're playing, not when you're starting out, when you're a beginner like myself. No, don't do that to yourself. Number 6, this is a big one. Not controlling your emotions. I think this is one of the most important things when it comes to investing, is for us to control ourselves, to control our emotions, because a lot of times our emotions betray us. You have to be very robotic when it comes to investing, because there's a lot of days you're gonna open your account and you're gonna be like, yo, I'm down $20,000. I want to sell all my stocks and go back into cash. And in those days, you have to dig deep. Again, this is why you have to have that goal set. You have to dig deep to look forward and say, no, this is actually an opportunity. This is just a stock market correction or a stock market crash. The businesses that I'm still invested in are good businesses, so therefore I'm just gonna keep investing. That's the thing. Control your emotions. A lot of people lose money in the stock market because they cannot control their emotions. And this is number 7. Not knowing yourself. This one is big. Sun Tzu said, know thyself. He said, in the battle, in any war that there is, if you don't know yourself, you will always be defeated by your enemy. Why? You have to know what your weaknesses are. You have to know who you are when it comes to investing. Are you an active investor or are you a passive investor? Do you love to read about companies, or do you just want to kind of enjoy the markets without having to pay attention to what's going on? So you probably need to be investing in ETFs. Do you enjoy learning and reading financial reports? Do you enjoy listening to earnings report? Do you enjoy watching quarterly earnings and all of these things every single day and researching about each and every single one of these companies? Know yourself. Do not try to do something else that somebody else is doing just because, hey, they're making a bunch of money, so I need to follow what they're doing to make sure that I make that much money. No. Know thyself. Number 8 is taking more risk than you actually need to take. Do you know how much risk that you are willing to take? First of all, this is something that everybody should do. We should all do a risk profile before we start investing, because this goes back to the point of your emotions and also like borrowing money to invest. Some of us don't need to be taking all those kind of risks. Some of us need to have a conservative portfolio that would just make us money easily as the years go on. For some of us, we're willing to take on a higher risk. Some of us, we have more years to look forward to in the stock market, so we're willing to put more risk, have more risky behavior in our stocks. For some of us, we don't have that many more years left in our portfolios, and so we need to be more conservative when it comes to investing. So know your risk. Know how much risk you are willing to take and are able to take. Don't just jump into the stock market and just do what old Bob told you to do. Know how much risk that you are willing to take. This is number 9. For some reason, people believe the stock market is a lottery system where all of a sudden you're just gonna become a billionaire overnight. It doesn't work that way. And just because you're investing does not mean that all of a sudden all the other financial stuff goes out the window. No. All the other financial stuff are just that important. Having a budget, living on less than you make, making sure that you're not buying and staying in debt. All those other things still matter. Just because you started investing doesn't mean that all of a sudden, oh yeah, I'm good financially. No, it doesn't. You still have to pay attention to your finances. And a lot of new investors make that mistake that, hey, I started investing, so all my financial matters are fine. No, you still gotta pay attention to those little things. You still have to know how to make a budget, and you still have to know how to take care of your financial situation. And the 10th and probably the most important one, and I'm gonna get a lot of pushback on this, is to be greedy. On this channel, we have a tagline that says generosity is always greater than greed. One thing that happens with new investors and even investors of old is as we invest more money and as we grow our wealth, we tend to become greedy. We tend to want to hold on to our wealth, and we don't want to help anybody around us. And this in and of itself, it may not hurt you today, but I believe that what goes around definitely comes back around. And so generosity is one of the greatest attributes that you can possibly have. And so it's big that as you're continuing to grow your wealth, that you never lose sight of the world. Generosity helps us to remain content with what we have today. So I know I'm gonna get pushback for saying all this, but becoming greedy is the 10th mistake that every new investor makes. Anyway, that's all I got for y'all today. I hope you learned one, maybe two things out of this entire thing. And if you did, hit that subscribe button down below and give me that like button. I really appreciate it. Also, down in the description, there's a lot of good stuff down there. So go down there and check it out. You can get yourself some free stocks down there. And I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace.